You're listening to the Eye on the Market Backstory with David O. England. This week's Eye on the Market Backstory. From David's column, Ask the Question, are Latin American markets weakening? And what does that really mean to you and me? David, when we're talking about Latin America, we're talking about, you said 30 some odd countries you mentioned in your column, that we're talking about a group of nations, and some of them have some serious issues. So maybe we could run through a little bit about that. We were talking about, I was looking at the 6 major ones you said here: Mexico, Colombia, Peru, Chile, Brazil, Argentina. And some of the problems are, well, you said corruption.
Yes.
That's one of the main ones. I think about that and why this would rattle the markets or affect me.
When we take a look at this, one of the things I like to do is study what Moody's, that does the credit ratings and these kinds of things. By the way, Moody's, Standard & Poor's, and Fitch are three of the major ones. So when Moody's Investor Services, they identified vulnerabilities in the Latin America, and they took a look at 4 of the high-impact vulnerabilities. Corruption.
Yeah.
Global risks, such as commodity price fluctuations, and one of the big things that comes out of there is oil, like Venezuela and these kinds of things. Tech-driven disruption, and the skills gap. By the way, all those 4 things kind of sound like we're talking about Illinois at times.
Yeah, it does.
Okay?
Where we're from, right here.
Yes. So those are some of the things that we need to keep front and center on what could be happening, and say, why does that really make a hill of beans difference? Because outside money, as far as investors, they don't want to invest in those areas that are the highly corrupt, because it all deals with uncertainty. Like I talked about, things, a news story could hit in Latin America and affect our markets within seconds. And somebody says, okay, well, how does that happen? Well, we identified the fact that so much of the, probably 70-80% of all trading is computer versus computer. The buy signals and sell signals, Tom, are keyed on different words. Case in point, whenever our president has a tweet, many times some of those words in that tweet then will stimulate massive buy signals programs or sell programs. The same thing is whenever we hear negative news coming from this part of the country, whether it's corruption, debt crisis, or whatever, that will automatically implement sell programs and will make markets go down. All right?
And we really have no control over any of that.
We have no control over it, but one of the reasons why we're going to take a look at this is because for the people that are traders out there, not investors, but traders then can be watching these things and have alerts set for whenever they hit that, a certain news story or whatever, then they'll get a message, and it's not by the pagers anymore. I know that kind of dates me, but
yeah,
we probably both
remember those, yeah.
Exactly. We have different forms of communication these days, obviously, but we can already have our brokerage account set up so that if something should happen, in case in point, the index in Colombia or one of the ETFs that I talked about in this column, if all of a sudden it starts to go south, then we could already have buy signals that we can make money when the market goes down. Or the same thing, let's say that they have some good news. Then that's how we can learn trading systems and have the computers work for us instead of we whenever I say we got 500 to 700 trades going off a second, we think negative. Well, what we need to do is to think opportunities. And that's one of the genesis on why I write Eye on the Market with David England. It's about opportunities. As you know, Tom, I'm a very positive person.
That makes sense. Let me answer the question.
Sure.
Let's go back again to those threats, though, before we get into the positives and how to react to it.
Sure.
You said one of the most important questions, you mentioned this in your column this week. What do you do with these potential threats? Okay, so what do I do with them? I mean, I can't do anything about it. It could change in a dime. It's, as we talked about, bad news, anything. You have all these different issues. And you were talking about uncertainty.
Sure.
Because, again, you got governments that are ran totally different from ours.
Yes.
And so your question was, what do you do with these potential threats?
Personally, we don't lose any sleep about it.
That's true. Well, that's good. Good to know.
But one of those things we just like to keep it up front and center so that we can kind of keep an eye on some of the banks globally, namely in China, Europe, Latin America, and United States. So if we start to see weakness, then that turns us into trading opportunities for us. Or let's just say that some of our listeners, let's say that they are 10 years into retirement. They've been able to make up for their massive losses that they had in 2007, and let's just say in this 10 years of this bull run, their portfolios are back where they were in 2007. By the way, some of the students that I see and I teach how to do this, some of their portfolios have not even retraced back that were in 2007, even though we've had this huge bull market, because that goes to substantiate my point. It's not being in the market that's important. It's what you're in the market that is, okay? So there's somebody who's been able to have these gains, and what they may want to do is just kind of keep an eye on things, on these types of banks in these areas, so if they start to see weaknesses, then at that point in time, then they may lighten their load portfolio-wise. As in, all right, let's just say I have 10 holdings, and let's just say I've got 1,000 shares in each holdings. I start to see these cracks. Then what I may do is go ahead and lock in profits on maybe 1/10 of that, incrementally. What we don't want to do is we never make decisions emotionally in the stock market. But what we could do is to start, it is not against the law to take profits. Very profitable thing, especially if it's in those retirement accounts that you don't have to pay, taxes on.
Right.
Okay, so it's indicators like Geiger counters for us. It's like the canary in the coal mines. So if we can watch where these areas are, then that has a better indication then we can make better educated decisions.
And let's get into some details here.
Let's do it.
Charts, right?
Yes.
And you said down here, I see potential threats, opportunities, and you first research funds, then individual stocks. So tell me a little bit about that. You said let's begin with the top Latin American exchange-traded funds. So what are we talking about here? Explain this to me.
What I like to do, and to answer the followers' questions on this, is I will examine that region's largest exchange-traded funds. And so in the first part of this column, I took a look at 4 or 5 of these funds to see which, and by the way, the largest, that means by assets under management. How large are these things? Okay, and then I'll also cross-reference with how many shares are traded. I don't like to deal with ETFs or funds unless they have at least 50,000 shares traded on a daily basis. That gives me the liquidity that I need so I can get in and get out. So when I take a look at the macro, by the way, macro is a Greek term. That means big picture. So I look at the big picture and I look at the funds. And then when I find the leading funds, I see what stocks are in that. But I'm a fund investor, especially if they pay high dividends. So in this situation, to answer your question, EWZ, the iShares MSCI Brazil ETF, that was the largest by asset under management. So that gives me something that I can use to compare it to from the scientific standpoint. Remember back in science class, we had a control.
Right.
So now I find the largest fund, and that's my control that I compare the performance, the relative strength of these other securities against it. It's all about analytics.
That's that word.
Exactly. That's what I do is analytics.
Yeah.
All right. But what that does then is that takes the opinion out of it, and we're actually saying, once again, the markets are ran by the institutions, the big players, your hedge funds, your pension funds, your mutual funds, and your large trading banks. When you and I buy, at the most, it may be 10% of any volume in that year. So I study what the institutions do, not what they say.
But what they do.
What they do,
Okay.
not what they pay big money for paid hacks to come on and say, this is what we're doing while we're doing the other thing. All right?
Because they want to make money.
Well, sure, I like to make money too, but I like to do it the honest way.
All right.
So in this situations, we watch what they do instead of what they say they do, and then we make our decisions on that. All right, and I do that through the charting.
Okay.
The charting gives me the aspect, the facts of what's actually going on, the price, the supply and the demand, the volume, and then from there I can use the many different oscillators and tools that we have, which, by the way, I like to keep it simple. The fewer the better, to actually then give me my buy signals and sell signals.
So what were you seeing? I mean, what are you seeing? I was looking here. You got charts and made those available.
Yes. And by the way, I'm a chart designer.
Yeah.
And I like to simplify these charts as much as possible. But what I saw was I got to see which ETF is the strongest, as far as the biggest price performance. And on this one, the chart that I designed for this, I went all the way back to the previous low on 2016. to see that after the low and the money started coming in, where did the big money go to? And that's what I did. So you can see on that the different funds, and EWZ was the top performing fund. Now, for people that are watching the charts, there's one in there that's a purple line that's all over the place. And what that is, that's just for traders.
Yeah, okay.
That's a leveraged fund that moves 3 times faster than what the tracking fund does. So that's just for trading as a trading candidate. But I threw that in because I like to give everybody a little bit of something. And I've got investors that follow me. I have traders that follow me. So that's why I threw that fund in. And that's symbol BRZU. Okay?
Okay.
That'd be the first chart.
Let me ask you this. EWZ says the largest format performs non-leveraged groups. For me, when I look at it, I'm like, okay, all right, I'm still maybe a little bit confused. Should I be afraid, or should I, you talked about this down here, but does it look like things are pretty good down in Latin America compared to us? Do we have that big of an influence in that area? You were talking about that as we got a little bit further down.
Well, a couple of these things, some of those funds are performing better than our United States market. And our United States market is very strong. So, yes, there's some very strong funds here. I didn't see weakness in this Latin America group like I definitely did in some Chinese
That's
funds.
interesting, because you wouldn't think the economies and the sizes of the markets, they're nothing like the Chinese. So, you know.
And then the real group, go back for the people that follow me, read the story about Europe from last week, there's some major problems with some of those European banks. And so I definitely, so what do we do with this?
That looks kind of positive. You were talking about early on, we were talking about this. Where's the positive?
These Latin American funds look very, very positive right now. So, but what I would look at is if they would go back and test their previous lows that I believe in that situation was in 2018, then and only then would I take a look at them as trading candidates.
Anything else as far as the charts? You had a second chart here following the money theme.
If you ever have any question about anything in business, follow the money.
Follow the money.
All you got to do is follow the money, and you can figure out whether it's in politics or in the corporate world or in small business, America. Follow the money. So then what I did is then I went and researched the largest banks in that region. And then went ahead and picked out some of the largest banks in those countries. Case in point, with these, I took a look at the Brazilian banks, the Mexican banks, and the Colombian banks. And then I took and did a chart on that to see how strong they are versus the biggest ETF. And a couple of those banks are looking very, very strong. I didn't see anything that showed a lot of weakness with those Latin American banks. Now, one of them, BBVA, is still trading positive. But there's some strength in Latin America right now. Now, that doesn't mean that a headline's going to hit and it hits the fan tomorrow. I'm not saying it's going to. But one of the reasons why so somebody says, why do I should have messed with this? Because the big money the institutions will always have information that you and I will never have. And for the most part, don't want to. All right? But we can see when they start to take their profits from years of gains, we can start to see that there's weakness well before the media picks up on it sometimes. Okay? So then that gives us trading opportunities, or opportunities to lock in profits if we are invested in these areas or if we're trading in these areas, Tom.
And what signals would show continued weakness, or what would signal continued weakness? Let's do that again. You said you said down here and said, well, what would signal the continued weakness in these markets or in this area you were mentioning right here? If any bank drops below,
I just go back and see the previous low,
which is we're down here to September 2018 lows. Yes. That's kind of like your baseline there.
If I see the price performance drop to that level, then that tells me that they know more about there's something going on, and then at that point in time I will follow it. It's either going to three things are going to happen. Mm-hmm. It's going to go sideways. It's going to bounce, and then it'll be a long or if we're playing options, a call candidate. Or if it takes a nosedive, then we can make money when it goes down, either by considering to short it or buy puts on it. Okay? So there's so many opportunities that are out there. That's why we study these things.
And basically, in the future, you're going to cover more about the signals in
Yes.
the later columns and kind of when to go and when not to go. And otherwise, I know she said basically don't jump in any of these Latin American banks without the proper buy-sell signals. You'll be covering that later. So that's a key
2020,
thing.
I'm going to be putting out my system that took me to the dance, my Simple Simon system. You know, one of the things as a system designer, I'm going to be sharing the Simple Simon system for free. So people will be able to take this, and it will give them a system. But there's no 100% system. This Simple Simon has made a lot of people a lot of money, and it's also saved them from losing a lot of money. But Tom, I'm going to put it on the table for free to our listeners and our followers. I'll also be putting some of my longer term, like the Rip Van Winkle, on the table for free in 2020. Just people just follow along, you'll see it.
So is there anything we haven't covered in this particular thing we're talking about? Anything we've missed about this before we give some information about how they can get a hold of you, just in case they have information about the systems and what's going on? Yeah.
The market continues to make new highs. Don't take your eye off the ball. Because what we're going to be doing in 2020 is also taking a look at the way that the indexes are figured.
Yeah.
The institutions, all they have to do is be buying the largest stocks in that index, running the index up, while selling off many of the stocks that goes unnoticed. And those are some of the things which I showed my students in 2000 was going on, and also 2007 that was going on. And many of them were able to make better decisions when they knew exactly how the market works. Wall Street works very, very hard to make this difficult. I work hard to simplify it. Wall Street works very, very hard to pick the pockets of the investors on Main Street. I work very, very hard to make sure that doesn't happen, okay? But, Tom, for everything that's negative, and by the way, most of the things out there are positive. And once again, I'm a positive person. But for everything that's negative, there's at least 2 opportunities on how we can build financial wealth for us and our families.
So the big deal is take the opportunities when they're there and find out what they are. Educate yourself.
Find out how markets really work so that you can learn how to work the markets.
Well, for more information, or you want to contact David O. England with questions about his column or anything that's going on, you can do this by emailing thetraderseye@gmail.com or find David O. England on Facebook.
Yes, if you have questions, send them to me. Who knows? They may qualify for something that I write a column about.
All right. We look forward to the next one next week and talk more about it later.
Thank you. And remember one thing. Plan your work your plan, and share your harvest.